what we really, really emphasize is that 90% of founders, when they are ideating and they're looking for an idea to start their company, and then they want to validate that idea before they're going to investors, they will only validate it as much as the capital market needs them to validate it, enough for an investment. What we like to see is that the founders went to that threshold and then way beyond it. Because what that tells us is that they are really interested in the problem, that they really understand it.
Hi folks, James here, and welcome to the Spyro Circle, this time in collaboration with Forbes Israel. Recently I spoke with Yuval Ariav from Symbol VC. Symbol is a pre-seed fund that invests in founders or companies that are before typical industries take off. The thesis is that they are pre-consensus. No one else really understands where the direction may go or what may come of it. It's a really exciting time, and I always find talking to pre-seed investors to be quite a different beat than later stage investors, who are usually more interested in the validation of the go-to-market strategies and some of the earlier times of those founders' stories. Anyway, Yuval and I spoke about really ideological ideas, what it means to go deep and focused in your research or business practices, what it means to be an outsider versus an insider, and what it means to really work hard and apply the risk and reward strategies, not just to investing, but to life and education. It was really interesting and one of our longest conversations I've ever had on this show. So I really hope you enjoy. Yuval, thank you so much for taking the time.
Thank you for having me. How are you doing?
Good, thank you. Good. How are you? How are you today?
Pretty good, pretty good. You know, things are slowly inching back to some semblance of normality, which is always a welcome thing.
Yeah, whatever normal is, right?
Exactly, exactly.
I want to speak to you today about so many things because I find that this conversation can go in a super interesting direction. At Symbol, you folks invest in what you call pre-consensus companies or sectors, or basically things that you think are a bit maybe ahead of the curve in some of the ways that tech progresses and maybe companies progress. But I want to hear more about how you chose that as a kind of thesis. So for those who are watching or listening and maybe not so familiar with your story, can you take us back to your time in kind of military intelligence, then your journey into being a founder yourself before going into the investment space? So who is
Sure,
Yuval and why are we here today?
sure. So maybe I'll take you even earlier than that because I feel like my early life really shaped what I do today. So before I joined the army, I was born in Israel, but I actually grew up in Brazil and Spain. Um, Came back to finish, matriculation exams, baccalaureate, and then joined the army and did that for 10 years. And, growing up, moving between a lot of different places, obviously as a kid has its, mostly good things, some bad things. One thing it really does for you, and I've only in recent years started to appreciate it, is it gives you this kind of perpetual outsider's perspective on things, which allows you to really easily question everything that people don't even notice because they're so widely accepted. And so after the army, where I did 10 years, which were incredible, got to work with the best people and some of the toughest problems, got to appreciate, the not just hard skills, but also soft skills. Um, I kind of went into tech. I was the founding team of a startup called Onavo, which was a mobile data analytics company and, a B2C company initially in a ecosystem that doesn't really like doing B2C. Then I started my own company called Fundbox, which was one of the first direct-to-customer fintechs in Israel. And in both these companies, I think both companies did things that, weren't the bread and butter of the local investment community. And so I think focusing my investment career now on what is very, very often outside of the central casting, or outside the consensus of the local VC community is something that's very much shaped by my own experience as an operator, as a founder.
Mm,
But but that's just kind of my way. That was just my way in. I can tell you now, having been doing this for a few years, that what that means to me is, and it's funny to say that it's primarily a Zionistic project, and that's kind of weird when you talk about being a venture capitalist and Zionism, and it's not immediately clear where these two things intersect. But in my view, the Israeli tech ecosystem is very, very, very good, probably the best in the world in manufacturing specific types of very successful companies, right? And if I had to kind of put a pattern to it, is we're very, very good at companies that are started by technical founders that are building technical products and selling them to technical buyers, right?
mm,
I think in these three sentences that kind of summed up a ton of what's happening here. And that's incredible that we're good at it. It drives the economy, it drives our tax base, it creates a lot of jobs here, it makes us indispensable. Uh, my view is that if we are to keep this train running, and under the assumption that tech is going to be at least one of the central tenets, if not the central tenet of Israeli economy in the next, 10, 25, 50 years, we need to diversify out of that. We still have to do that, but we also need to do other things that are outside of that mainstream.
mm,
Now, the good news is if you look historically, most of the largest Israeli unicorn, most of the largest venture successes were actually not in things that were at the time mainstream to the Israeli VC community. And so this isn't, you don't really need to believe that much to understand that we can actually do that. And so for me, what I do is I just really enjoy being one of the few people who enables that kind of innovation and building what I hope to be the go-to firm for that kind of place. So that's the Zionistic part of it. I think personally, I enjoy, spending my time on problems that don't necessarily have a playbook. We had to figure out, things from the start. And then also, I ultimately think it's also a very, very good business because it's a lot of people forget that in VC. It's not just that you have to sell high, you also have to buy low. And I think naturally, when you go to things early, when not many people are noticing them, you can actually have much better financial outcomes because you're buying in a reasonable valuation. You can acquire a decent ownership of the company. Um, and I think that obviously matters for this to succeed.
wow. Okay. Wow. I'm going to stop you there because we've touched on a lot of different pillars of
Yeah.
some of those themes, and I want to kind of dissect them one by one. The first one, I mean, insider outsider. It's the way you've just outlined it really goes to show not just your own personal journey, but the founder VC kind of relationship, but also Israel and its relationship
Yeah.
to the diaspora, to the wider world. So there are many parallels that you've kind of outlined. So let's go through them, or try to, right? So
Sure.
insider outsider. I've heard a lot of kids say that from a young age if they have parents who were oil people or business people or actors or whatever, and then they were kind of
Yeah.
forced to travel a lot as a young age. They say, well, it taught me a lot about the world, and it taught me about how to be an outsider and communicate with people, and that part of your story holds true, right? And that's a global
Yeah.
feeling that many people feel, many people close to me feel. Um, the investor company point of view, right? So if we're to stick on the pre-consensus idea, in that you look for a company, and your own company, which you just mentioned, Fundbox, that you founded, you had a famously difficult time getting seed for that company. Am I right? Like that
Yep.
there wasn't such easy
In
traction
Israel.
in
In
Israel,
Israel.
right? So
Absolutely.
in Israel,
Yeah.
so you were on the insider point of kind of, I don't know whether you were identifying a pre-consensus idea, if you knew it at the time, or kind of that's just kind of how it happened. But Then we're talking. Then you mentioned about Israel's health, health of the tech ecosystem and its place kind of with the rest of the world. So many different parallels there. Now, Symbol over time, through investments that you've made, through growth and exits and etc. And I'll let you kind of highlight some of the ones that you're most proud of or most excited by. Are you in somewhat of a contradictory term now because you're kind of solidifying a place to define the pre-consensus idea? And if you are embedded as that kind of firm that is that not a contradiction? Or am I just trying to
That-
invert this idea too much?
No, so that's a really good question. Um, and I can tell you, I think that what you've highlighted um is a tension that we have to navigate every day. And the reason is, as you say, once you become more established, you all of a sudden have access, especially if you've done some investments that have proven very well. Um, you all of a sudden essentially kind of get a buy-in into some of these, kind of more mainstream but hard to get into companies. Um, I can tell you that I think because my investment career started before Symbol, and now maybe 8 years later, I can tell you that the less a deal was mainstream or competitive when I put the first check into it, because I only invested first check, the better off the company is doing now. I- I've We've already been in that situation for I think the last few years, where every once in a while we encounter a founder who we know through our network, who is an exceptional founder. Personally, in terms of track record, could be a group of founders, and they're doing something that at that point is a very, mainstream thing to do. Whenever I talk about this, I feel the need to make that disclaimer that when I say mainstream, I don't mean that in any kind of value judgment kind of way. What I just mean is that that idea is very in line with what the capital markets are interested in investing in. And so when we come in contact with these founders, what they will typically tell us is, listen, love working with you guys. Because we're, these exceptional founders doing something that's capital is chasing now, the round that we are raising now, the first round that we're raising now, is probably way too big for you guys to lead, right? And fund one, we wrote up to $3.5 million checks. Fund two, we're probably gonna write up to $4.5 million checks. We've seen opportunities to join rounds that were 20 or 25 million, first money in the company.
Wow.
And and so your question really touches on this, right? And when we have these opportunities, are we gonna use them? Are we gonna invest in these companies, or are we not gonna invest in these companies? So far, I'm happy to say that we were 100% disciplined, meaning every time we got that offer, we politely said no. By the way, in many of these cases, even despite us not investing, but because we had pre-existing relationships with founder, we still and very often have introduced them successfully to investors who ended up doing that or follow-on rounds. Um, Sometimes we brought them executives or talent. So we really do enjoy working with these people, but for what we are trying to build, that's not our bread and butter.
So let's talk about that then, because I want to understand. One of the things that I found very interesting recently is in my conversations with investors, the difference between the early stage investor and the late stage investor. And one of the things that the late stage investor often says is that they look for a history, a track record, a pattern of growth, and then they want to jump in on that
Yeah,
train.
yeah,
The early investors I find are, and investors usually don't like it when I describe them like this, but it says more about me than them. But they're more of the kind of dreamers and the thinkers, they have no product market fit, right?
yeah.
They don't know what the market's going to look like. They don't know any of these things, and so I'm very interested in when the early stage founders in what they look for. And I'm very
Sure.
bored of hearing when early stage investors say that they just love the team or they just love the founder. That is the I'm getting so bored of hearing that. So tell me, for someone who manages a fund that specifically goes on pre-consensus ideas and that
Yeah.
your thesis alone is contrarian, what do you look for? And you're not allowed to say team or founder.
Sure. Um, Maybe I'll just kind of as a throat clearing, I will say that liking the team personally is very important because you're gonna
I'm
work
not
with them
saying
now,
you.
right?
Yeah, that's fair.
But for us, besides the table stakes of like integrity and grit and all that, what we really really emphasize is depth. Uh, we have always, but I think it's been even emphasized and exacerbated in the last 5 years, been in an early stage markets where 90% of founders, when they are ideating and they're looking for an idea to start their company, and then they want to validate that idea before they're going to investors, they will only validate it as much as the VCs, the capital market needs them to validate it. Enough for an investment. What we like to see is we like to see that the founders went to that threshold and then way beyond it. Because what that
Mm.
tells us is that they are really interested in the problem, that they really understand it. Um, we talk about uh, the Dunning-Kruger of ideation. I don't know if in past podcasts you talked about the Dunning-Kruger effect, but it's basically uh,
No, but I know all about it, so I don't need to explain
yeah.
it. No,
Okay, good.
I'm kidding. I'm kidding. The
Uh,
Dunning-Kruger effect is the less you know, the more you think you know, right?
yeah, exactly, exactly. The more confident you are in your knowledge. And
Right, right.
what we like to see is we like to see people whose level of expertise forces them to say to some things we don't know, right? Because that's how you really know that they know their stuff. And it's not like once they come in contact with a market, that's not going to radically change. But at least you're exploring off of like a very safe base. And that depth, we've found that it's very correlated with other skills of success, like depth sometimes means depth about the way you hire people, and how your whether you look at people for just soft skills or hard skills, whether you're like a well-rounded kind of hirer. It goes to strategy, it goes to planning, it goes to being accountable, it goes to treating people and understanding that this ecosystem, even though we work at you know 13-14 month cadence, which is how often usually companies want to raise from VCs, you're in this ecosystem usually for about 15, 20, 25 years, and so you're playing the long game. And so you have to think about whether things are transactional or not, and we see a lot of that is correlated with depth.
Mm.
But if I had to
Mm.
put like one overarching theme for us, it's depth. um
And you mentioned depth in kind of learning the problem or addressing how to tackle the problem, or you know. And then you mentioned a few other things. Does that
yes.
extend anywhere else to in knowing the industry or
Yeah, yeah, definitely.
like you mentioned a few ways, but where
Mm,
is the depth, or is it kind of
yes.
broad depth?
Yes. Okay. So I can tell us, I don't know that this is generalizable to all early stages investors, but I can tell you, what we look for in very, very high level terms. So in the team, we look for all these things, but we look for depth. And our key bets are on a team and a market, right? Most of the teams that we've seen and have invested in, the team came to us with a concept where at the end of our diligence, in our investment memos, we say things like, you know, team, checks all the boxes we're looking for. Market checks the boxes we're looking for, which I'll talk about in a second. And then we say something like product is probably V1 of, and it's going to probably change 5 times before they hit something that maybe looks like product market fit, right? In fact, one of our fastest growing companies in the portfolio is a company that did, one strategy pivot and something like 5 product pivots in 2 years before they got any meaningful revenue. And that company scaled within 3 years to like $50 million in revenue, right? And so for us, we are very patient because I think I and all of my team is from an operational background. We know things take time. And for us, part of the reason we're focusing on depth, because depth is what allows you as a group of founders to be very systematic in the things that you're testing and learn from each iteration in a way that brings you closer to product market fit. Now, the other part of it is the market. And so our view to market is primarily a maximalist view, meaning we will be interested in diligencing a company if we are convinced that the market is absolutely huge, plus that we feel that because either competitive dynamics or lack thereof, or um, a unique proprietary strategy or asset that the company has or builds, because when we invest, we still largely don't have a ton. We believe that that company can become a de facto monopoly in that giant market, right? And if we think the market can accommodate that, then we start diligencing. And at that point, we ask ourselves things like, okay, where are all the things that this could go wrong? And we try to understand and kind of get comfortable with them or not, right?
Well,
Um,
in
yeah,
that sense, because so I'm sorry to cut you off there just for a second,
yeah,
because in
go
that
ahead.
sense, what you folks do is you kind of identify those things that you've just outlined, and then you put in the first check or an early check in this pre-consensus idea, and then people join later, usually American
Correct.
investors.
Correct.
So in some ways, you are defining the next consensus if successful. Do you think about that at all, or does that scare you?
So, um, let me just do a minor correction.
Okay.
I think the people who are defining the consensus is not us. There's the founders, right?
Right.
We occasionally help them talk about it in the right language. We occasionally help them figure out what investors would like to see in terms of metrics or a story to convince them that the thing that they would thought would never happen or one of the key assumptions that these investors had is just plain wrong. But it's the founders who do this, right? I think over time, what happens is as a firm, um, you get the reputation in the investment community that, oh, that weird thing that Symbol invested in 6 months ago, it sounds weird, but we should probably look at it and understand like what Symbol sees. Now, that's not to say that all of our investments are good. It's that our statistics, maybe are slightly better than the average market. If the average market, 95% of companies die, for us, it's maybe 85%, right? Um, but I think over time, when you've done enough bets that when people hear about them, they're kind of like raise an eyebrow, and then a year and a half goes by, and you hear the company is doing well, and then you talk to the founders, and you realize that a preconception as an investor that you had about the market is just wrong, and the founders proved it to you. Then you're like, huh, okay, interesting. Maybe these guys, like, maybe they're heretical enough, which I think is what we are. They don't believe enough, and sometimes it bites us in the ass, right? But they have this muscle of not believing a lot of the VC common wisdom or common knowledge, and it's good to kind of hear their take on things. And I'm very happy that we're now a few years in. I feel like we are kind of we have a good momentum and becoming that in that status, which is great.
That's that's a very noble answer because you're shifting the credit from yourself onto your founders, which is a very, very nice thing to hear. But I'm going to then kind of double tap on that
Okay.
because if you're going to say that, let's say 95%, and yeah, I'm just kind of going on the numbers you said. I'm not holding
Yeah.
you to a
Yeah.
strong account to them, strict account. Let's say 95% of startups fail, and in your portfolio, for the sake of argument, it's 85%. Just to quote
Yeah.
your number back to you,
Yeah.
by nature of being a pre-consensus thesis, you are effectively hearing from the founders. So I try to put you in the middle there. It's like, oh, are you
Mhm.
defining the consensus, and you put it off to the founders. So the founders are setting the consensus. At what point is being anti-consensus or pre-consensus an outsider, so to speak? Some of the things we've already spoken about. At what point is that just kind of being a contrarian? Because contrarianism is easy, right? Anyone can
Yeah.
just
Yeah. Yeah.
disagree
Yeah.
or
Yeah.
expect other things. Like, what do you see in that? And maybe the depth that you mentioned
Yeah.
validates the idea that they are not a contrarian. So talk to me about how these themes come together, because
Yeah.
anyone can disagree.
So I'll tell you, I think you're absolutely right. I think being, going with the consensus, um, is not very is not a very difficult thing to do. I think being a consensus investor is difficult because you need to figure out who's doing what. You need to build the reputation and the value add and have the skills to really understand, why this consensus company versus that consensus company makes a better investment. I think getting into hard, kind of uh, highly sought after deals is a skill. Um, but I think figuring out what the consensus is easy. You just got to look at Twitter, right? Um, Similarly, I think being reflexively contrarian is also easy. Like you look at Twitter and you just add no in the beginning of whatever somebody says. I think for us, and again, I think we are helped by the founders in doing that. And at that point, we probably have not even invested in them. But when you meet with with the best founders, at some point, and very often they will not speak of it in this language, they will say something to the effect of, we know, or we believe, or we've observed something that the market doesn't understand. And
Mm,
that knowledge can come from a very deep analysis that they did. It can come from a very comprehensive validation process that they did. It can come from being past operators in the industry. It can come from a lot of different sources. And at that point, they kind of shine a spotlight on that kind of hidden truth. And then you can, as an investor, kind of double click on that and figure out whether you believe it or not. That's one way in which that happens. The other way in which that happens is you look at a company, and by nature, you talk about the company with other people who you trust, right? Other angel investors, people from the industry, other VCs. And one of the things you notice is that, if you think about startups are 7 to 10 year projects. And very often, the lessons learned from a startup kind of take root in people's mind, not a year in or 2 years in, but like 7 or 10 years in. But these lessons really are rooted not in the now, but in what happened when the company started, and a lot of the things that happened within that part of the economic cycle where the company grew up. And so what you'll notice is that a lot of the market, the common wisdoms, the kind of like the truisms, or truisms maybe cheapens it, but like the axioms the market operates by are axioms that came to be after they probably coalesce something like 7 or 10 years too late. And by that time, a lot of them are true, but also a lot of them don't hold any. And so part of my experience as an investor is when I look at things that are interesting to me. And again, this starts from, oh, I think this could be very, very big. is, okay, I understand why, given what the market think that about this assumption of this strategy will never work because, in the last 10 years, we've seen a ton of companies try and do that and had not worked for them. But guess what? A lot can happen in 10 years, right? COVID, geopolitical unrest, LLMs, tons of changes on the distribution side. And so what you're asking yourself is, do I believe that all of these assumptions that cause other investors to look at this deal and say, this will never work, do you actually believe that assumptions still hold? And that's a lot of our diligence.
That's such an interesting point of view because you're speaking. I mean, I don't, I'm not being contrarian. I'm not disagreeing with the view. I'll say that it's quite interesting to hear it from an early stage investor and not like a later stage investor. Or am I kind of conflating the idea? Because in some ways, what you're saying is we don't know what's going to happen in the future. We have to go off the past to understand the present, let alone the future. But then here you
Mm-hmm.
are in this pre-future in the sense of pre-consensus,
Mm-hmm.
investing in an LLM company before there were even LLMs, for example.
Mm-hmm.
So is that another contradiction? Talk me through kind of your thinking there, because it's an interesting. We've touched on an interesting point.
Yeah. So maybe one way to think about it is the following. Let's say you're a late stage investor. You invest in a company maybe 3 years before it either doesn't attain the outcome you expected, or it gets acquired, it IPOs. But basically, what that means is that your feedback loop is now 3 years old. And so when you decide whether or not it was a good decision, that data point is relevant to 3 years ago. And so if you see another company today, the lesson that if you put that lesson into practice in your investment decision today, that lesson will be more fresh than an early stage investor who has that feedback loop 10 years later, right? And so my sense is that there are actually very, very few uh, past lessons that are immortal, because reality changes, people change, the way we build technology change, market change, all of these different things change. And so when you say for what we do, it is incumbent on us when we say no because we believe an assumption, because we hold an assumption that has existed in the investment community for a while. We owe it to our profession and what we do to ask ourselves, do we believe that assumption still hold, or are we holding it because we held it a year ago and a year before that and a year before that and a year before that? And I think maybe the contradiction you're describing has to do with the fact that our horizons are 7, 10, sometimes 12 years, whereas a later stage investor, maybe their feedback loop is a lot shorter, which makes their both feedback loop and lessons learned fresher, more relevant, and the reality just changes less between those things.
Mm. You just reminded me of the famous Blackadder bit when they're
Which
in
one?
World War Blackadder. It's like a sitcom from
No,
Britain,
no,
and
I know, but
oh, you know
which
it? Okay,
Black?
yeah.
I love it.
So
Yeah.
you're reminding me of the Blackadder bit when they say we're going to attack the enemy this way, and the guy
Oh,
says, "Well, we've done it 20 times before," and the guy says, "Well, exactly. They wouldn't think we would ever do it a
yes,
21st time, or whatever the number
yes.
was."
They
Um,
shan't think of it.
yeah,
Yes.
exactly.
Yeah.
Of course, though, there is a version of this story and a version of this conversation where maybe the founders aren't, in the when you don't invest in them, or the company isn't successful, or any of the kind of, I don't want to say more negative, but any of the less successful outcomes for the either an investment side or a company side, there is a version of this tale where it's not that the company was too niche or that the industry wasn't ready. It's that maybe there was like not so much a lack of depth for the founder, but maybe a surface level of the market or the VCs expecting results so soon. Is the VC space victim of
Yeah.
of that
Yeah,
kind of surface level, give me results now kind of thing.
I totally understand the point. Let me rephrase it. And we'll see that we're talking about the same thing. I think what you're asking is, the dynamics of the capital markets and specifically the VC market is such that um, you expect results in a shorter time frame than maybe an industry can accommodate it.
Right, exactly. And then
Yeah.
so people think that consensus isn't met, but actually maybe if it was
Yep.
given
Yep. Yep.
2 more years.
Yeah. That's an absolutely correct point. That absolutely happens. I think for us and my experience, investing in these types in this strategy for the last 8 years, um, what typically happens is that there are other funds who, because of their strategy, because of the personalities involved, because of their experience in adjacent markets, will not need to see revenues in the Series A because they will believe that the upside is very, very large. Now, in some ways, this is an area where the market dynamics kind of help you because if I funded a company and the company is closer to proving out the thesis, but still that does not manifest in revenue. And then a VC looked at the company and said, okay, I know these guys don't have revenue, but I believe in what they're doing. I think there is a huge need there. And I am willing to put more money in the company to buy them another 2 years to prove that out. The way that's going to manifest is usually in the terms of the deal, right? So if that company had the revenue that it expected, or that the other VCs wanted to, if it had $10 million in revenue, obviously the valuation would have been a lot higher, right? And so the market can take care of that in that way, which is also why a lot of, these pre-consensus bets, you typically invest in the company in lower valuations than you would if it was a very consensus company. And that's why I think earlier when I kind of said about, all the reasons why pre-consensus is great is that at the end of it, it's a very, very good business because you're buying at a much lower valuation than in the consensus markets. And the upside could be, as big.
Hmm.
Um,
Like a
and
supply and
so
demand kind of thing.
correct, correct.
Hmm.
And in the past, I can tell you, I funded companies who, after 2 years after I funded them, we had a board. There wasn't any revenue to speak of. But I thought that the market is there. I thought that the founders were doing the right thing vis-a-vis systematically testing product hypotheses and business model hypotheses um, to find product market fit. And I told them, listen, I think you guys are doing the right thing. I'm happy to invest more if you don't find anybody else. And I think it's not a very big subset of cases, but I think in at least 50% of these cases, after that second tranche, the company found its product market fit, and in at least two of these cases, these are companies where people are now fighting over to invest. Which means that it crossed a revenue threshold where all of a sudden the company's consensus, right? Because all of a sudden investors look at the company and can say, okay, I can now see that some preconceptions that I had about this market are untrue. But it's easier to learn when you have the numbers. That's the right. That's the thing. That's why you need so much depth to do the analysis that will allow you to gain some confidence about a positive product, a possible future for this company.
So if we are to, and I want to briefly return to this idea one last time before we touch on to some of the final conversations, final kind of topics I want to touch on. But if we're going to touch on this idea of maintaining depth, and examining that and exploring that and seeing the fruits of those labors pay off in the future, um, we don't live in a world of depth nowadays. This interview will be however many minutes, probably closer to an hour. But we probably both know that the bits that will be watched the most are the snippets that go along on social media.
Yep.
Also, why write a 10,000 word feature analysis article when someone's going to read a chain of tweets, right? So
Hmm.
the world is becoming shallow, sorry. The world is becoming more surface level. I don't want to say
Yep.
shallow. It's becoming more surface level. It's becoming less deep
Yep.
in how far people can go. And that's in a consumer base, that's in a content consumption base. From a business point of view and from a VC point of view, is that changing anything in the space or how you guys operate, or is that, or do you operate because of that? Right? Like, what are you
Uh,
seeing in terms of our
yeah.
changes?
That's a good question. I've never actually considered that framing of it, but I think it's pretty true. I am by nature an introverted person, in the sense that I would prefer to most things like to stay home with the book, right? And I'm the most curious person I know, and I love learning, which I think informs a lot of our our strategy and our drive towards depth. I think what you're describing is 100% true. I also, we've not covered this, but one of the things I do is, as I teach a course in New York, um, a big part of which concerns how the spread of data and AI and kind of very highly available information
I was
will
going to
go.
say, sorry to interrupt you. This is data-driven dollars at Columbia, right?
Correct. Correct. Yeah.
Okay, so I was going
Yes.
to lead you into that in a sec, but
Ah,
no, but
amazing.
no. By all means,
Uh,
take it away. I'm glad
and and
I'm glad we're
and
aligning.
yeah, and then part of that course, a big part of that course is how does the intersection of um, data and AI with business incentives and business models, how what that does to society. And one of the things you see, and I think you hit the nail on the head, is um, our collective attention span and our average attention span is just going way down. By the way, at a time in the world where the world is more complex than ever, which is also why you see such a spring of conspiracy theories, because I think that's the bridge between the complexity of the world and the kind of like bite size quantum with which we're accustomed to get information. And so
We
with that,
crave patterns, right? That's how they
we
form.
crave patterns and we crave simple explanations, right? We crave simple explanations. They're more memorable. They're easy to talk to. In our internal risk management mechanics that we kind of very primitively rely on for survival, just like we did you know tens, hundreds, thousands of years ago. Simple is better, right? And that's something that's wired hard into our brains. But with that as a backdrop, going back to your question, especially in an age where, because of AI, building products has never been easier, faster, cheaper, our view about depth being um, huge, and not just depth, the capacity for depth, right? It's not just that you understand something deeply, is that you are fine with sitting on your ass at home and spending 6 hours diving into god awful McKinsey super boring reports to understand some fundamental truth, and that you can review that with a critical eye about what's wrong and what's right, and from that build a deeply held internal truth, right? That is a skill set that is rapidly fading from the world, and I think our and we've thought that since the inception of the firm, way before ChatGPT. But I think the advent of LLMs has only caused us to be more adamant with that fundamental truth, right? um
And
yeah.
there goes the return to your contrarian pre-consensus idea. I mentioned at the start whether or not it was a contradiction, but I'm glad that you are now,
Yeah.
it's become full circle, which is exciting. I love it when
Yeah.
episodes come together like that. I also want to add
Yeah.
as well that I don't want to interrupt you and I want you to stay on your point, but so much of investing is about risk and reward. And
Yeah.
the higher the risk, the greater the reward. And I kind of feel that's the same way with depth, because the deeper you go, or the harder you study, or the more you exercise, or the harder the challenge, the more rewarding it is when it ends.
Yeah.
And if people are going shallower, or sorry, if people are going less deep, I don't like the term shallow. I'm going to try and edit all of that out. But
Yeah.
if people are going more towards the surface, and if people are going less deep, then the reward of going deep is also being diminished, right? Like we're
No,
getting less of that.
you're
So,
absolutely right.
and if you teach at
Let me,
Columbia, are you noticing anything in your students? Because I imagine they're younger; they probably are growing up in a
yeah,
post-COVID AI era. So,
yeah.
what do they think about all of this?
Okay. Let me give you um another aspect of which another aspect which I think what you said is true, but a lot of people don't consider, which I view both in founders that I talk to and in my students. So you said, the higher the risk, the higher the reward. And that's true. One of the aspects in which this dynamic exists is um, the psychological safety of exploring new ideas, which is the essence of the Dunning-Kruger effect, right? Uh, People are hugely psychologically rewarded by starting to learn something new because they very, very quickly feel like they have it. They feel like they grasp all the ends of it. They feel like masters. That's a great, like very great hit of dopamine. But that's obviously not true, right? Because once you kind of dig deeper into something, you all of a sudden are exposed to all the different complexities that exist because the world is a complex place. And at that point, the risk goes up, your psychological risk goes up. It is not a fun experience. And the reward goes down because you feel like, oh, I'll never figure it out. And when I talk to students and when I talk to founders who are in ideation, that's typically where most people will give up. Now, the second hit of reward is actually more interesting. If you kind of went through that kind of chasm of despair, and it takes time. It takes time, it takes expertise, it takes tenacity, it takes, your ability to like be very disciplined with your psychology and your habits. But once you've crossed that chasm, the reward you get for now understanding, not only having a lot of confidence in what you know, but also understanding that when you look behind you, you see a ton of people who didn't have the courage to leap that chasm. You see that you're alone and you can actually do really, really amazing things because there aren't a ton of people breathing them. And that is true for founder ideas. It's definitely true in my class at Columbia, only there, it's less of a competition, but it's more of you challenge students with questions that, sometimes when I had classes and I say, well, in about 2 hours, I'm going to send you all an email with your assignment. And the assignment for today is going to be X. You can see on some people's faces that they, just by hearing the assignment, sometimes give up. Why? Because they don't think they have the skill set. They don't think they have whatever it is. I'll give you one example, which I that's why I keep doing it because I love how it changes people's belief in themselves. I largely teach folks who are non-tech, and in the first class ends with the following assignment. I give them a data dump of location data for like 6 anonymous people. So every hour, like a GPS coordinate for where that person was. But all I give them is like the hour, not the name of the person, like the number of the person and the GPS coordinates. And I ask them about 40 questions about these people. And I say, just based on that data. Tell me what you know, everything you know about these people. And just because of they have never done something like that, and because now studying, learning, and of course I give them all of the data they require to learn how to do that, you can see on some of their faces, they're like, we will never figure it out. And part of the reason why I love doing it is because almost every year after or at the beginning of the second class, they will walk into class, they will come to me and they will say, this has been an incredible experience. Like I went into this knowing nothing about programming, knowing nothing about, you know, tactical data analysis, knowing nothing about this. And now that I've done this, all of a sudden, when people talk to me about stuff that I only kind of hand wavy understood before, it helps me imagine. And so that's what I mean. I think a lot of people are discounting what you said, which is very, very true in the context of the psychological risk reward we have when we learn new things. And again, this is at a time where we are bombarded with like confirmation bias dopamine and very easy dopamine from social networks that doesn't really give us the incentive to, again, go deep.
Yeah, yeah. I mean, so I paused there. I was so interested in what you were saying, and I'm so interested in the kinds of classes that young people in college are learning because college, American campuses, it's gotten a bad rep over the years
Yeah.
for a conversation that we don't need to have today. But it's really interesting to hear about classes like this because it's just a completely different world from what I was like as a student, or what I was learning. I don't want to age myself, but it was approaching 2 decades ago since I was at an American college room after I spent a few years there away. Does it give you faith then for the future generations? Because there's the future, the young people are getting such a hard rep, and then I'm seeing teachers online saying, "Well, our
Yeah.
kids are cooked, right? They're not writing essays, they're not reading books, they're just operating on a surface level." What are you finding?
Um, I find that the people who have, you know, a fire under their ass, they'll have a fire under their ass no matter what. Right. And I think that's always been the case.
Mm,
Um, I am more worried not about let's call it the business outcomes for us as an economy or society. I am more worried about our capacity to organize as a liberal society as a result of us not being able collectively. It's not even at the level of agreement. It's at the level of understanding the complexity of the world.
mm,
Um, I think our difficulty to agree stems from the fact that we have a comprehension problem as a society, right? We do not comprehend the world and how it really works. Now, I don't mean that everybody needs to be a nuclear physicist or an LLM engineer, um, or a, you know, brain surgeon,
or a philosopher.
or a philosopher. But we have, and that's what worries me. We have a big problem with collective critical thinking. When I say collective, I mean, you know, generally in society, but also in sociological and political pockets within that. And that, though it goes to the left, goes to the right, goes to everybody. And we have a problem, and because of that, we have a problem of identity hijacking. Meaning it's very easy to hijack people's. I'm going off on a tangent here, but you kind of open the door. Um, it's very easy for uh, motivated people to hijack people's identities and therefore their morality, their opinion, their collective force in elections and such in a way that's detrimental, I think, to society and to liberal values. Again, I think we could have a whole discussion just about that. But that is the thing that actually works. It's not that the outliers will not be there because the outliers will be there by definition. It's that it's that the median person is becoming less possible to grasp the complexity of our world, which is only getting more complex.
Wow. That you're right. That is a whole different fork in our road today that we
Yeah,
could go
yeah,
down
yeah,
to. And I
yeah.
don't really want to take us there
Okay,
at the time that we have on the clock. But I do want to, first of all, kind of hopefully book an updated episode. We can do round two. We can talk about all of those
happy to,
ideas in a future
happy
episode.
to.
I do want to touch on the last thing that we wanted to speak about today. And I don't want to toot your horn too much, but I do want to bring it into the episode as a kind of validation for the thesis and all the things we've been speaking about today. So I do want to highlight that Business Insider did recently rank you folks, Symbol, as a top seed investor. So it was the Seed 100 list, an annual ranking of the world's leading pre-seed and seed investors. You folks were up there. The first time an Israeli firm has been listed alongside people like Sam Altman and Axel and other such folks. What does that mean about the thesis being validated, or is this the start of something? Like, talk to me a bit
Yeah,
about what that felt like being placed among such folks in a
yeah.
list like that.
So to be completely honest, the first time I got an email about it from the person at Business Insider who runs the project, I thought my friends were punking me. But then I kind of replied, and I realized that it was serious. Look, as an investor, I'm very skeptical of lists generally. And so when the first thing I asked them is how did you make that determination? And they sent me their methodology, and looking at the methodology, I got convinced that we should be there. Of course, that methodology, is just, a few metrics, which I think are directionally very, very good, but obviously funds are, 10, 12-year endeavors. And so we got to wait for, the final outcome, but we are on a very good trajectory. And I think for us, first of all, as an Israeli, I'm very, very happy that there's an Israeli fund there. um, I'm very happy that obviously it's Symbol, and I'm very happy not just that it's Symbol, is that it's the pre-consensus notion and strategy, because again, I'm coming circling back, we are here in large part because we believe that it's critical for the ecosystem and for Israel and for the economy to be able to cultivate these companies that are not in the mainstream.
Hmm.
And and I think that validation for us in investors is essentially a validation for our portfolio, which is a bunch of Israeli companies that have been built outside of the mainstream and that are appearing to be very meaningful to the world. And so I'm very, very happy with that, obviously.
I do want to tie a ribbon around that box that you've just
Okay.
said, because you did say, you've kind of gone on record of saying, you said it now and you said it earlier, many of the world's most important companies initially looked unconventional or even unlikely. And if we're just going to kind of tie up everything that we've spoken about today, you could say that that statement or that belief is not just for Symbol, it's not just for depth or surface level, it's not just insider outsider, but it is Zionism and it is the state
Yeah.
of Israel. It is unconventional or even unlikely, the outsider building something the world couldn't imagine. Hey ho, we've done it. We've formed a pattern in this world of
Yes.
chaos of
Yeah.
Zionism. Is that something that was I know you mentioned it just now, which is why I brought it back to you, but is that something you think about all the time?
Yeah.
Yeah.
Yeah. We don't have time, but I'm, again, going back to the outsider theme. I have a whole, we have a whole, thesis about why Israelis and Jews are the perpetual outsiders disrupting from the outside. Again, we don't have time. But I think what we're doing is emblematic of, the larger Zionistic project. I think it brings out the best of what Israel has to offer, which I think both from an economic but also a geopolitical perspective is very important, to the strength of Israel and our durability and our ability to lead the world and not just the mainstream things, and be real Or Lagoim.
Wow. There is such a great That is such a great way to close all of the topics we've spoken about today. And I really wish we did have a second episode or a part two on the cards. I'm sure we'll probably make it happen in the future. For now,
Perfect.
Yuval, I do have to close us off, unfortunately, but I don't want to leave you just yet because I do want to run a quick fire round by you. And I
Sure.
do want to shoot some ideas at you or shoot some questions, and I want you to answer them as quick as possible
Let's
with
do
as
it.
little thinking, just first instinct back. So, what is the last book that genuinely changed how you think?
Hmm. The Righteous Mind by Jonathan Haidt about moral psychology.
Who's a founder you didn't back that you still think about?
Um, I really would have wanted to work with the founders of 30 Madison. They're just incredible people.
What's a market that everyone in Israel is chasing, but that you think is already over?
I don't think there is a market like that. I think generally people are chasing the right thing. You can argue whether too many people are chasing too few deals, but I think largely the ecosystem here is exceptionally good at trends.
What's something in Israel that no one is talking about that you think they should be?
Um, they don't talk about how the fact that we are an island nation can be leveraged for us being a powerhouse of AI.
If Symbol didn't exist, what would you be doing?
I would be building something. It would probably be something physical. I don't even know if it's going to be a tech thing or not tech thing, but I'm just in love with the process of building. I got to build things all the time. So it's definitely going to be something that's something in building, but specifically, I'm not sure. Or I'll be spending a lot of time in cooking classes because I love cooking.
That's also building.
Yeah.
Cooking is a form of,
Yeah.
I guess that's more of an art, and then baking is the science. Anyway, that's a whole other thing.
Correct. Yeah. Yeah.
That's
Yeah.
a whole other thing. Yuval,
Yeah.
final question for you, and then I'll let you go. What is the best way for people who are watching or listening to this today to follow you or Symbol or any of the things that you folks are up to? And what's the best way for them to stay in touch?
Sure. So our site is at symbol symbol.vc. Follow me on Twitter, X at Yuval Ariav, Yuvalariav. Same on LinkedIn. Yeah,
Wonderful. I'll be sure to put those links down at the bottom and in the text so
amazing.
people can follow and keep up to date. Yuval, thank you so much for your time and insights today. It's been
Thank
super
you.
interesting to
Thank you for
get.
having me.
It's been great to get such a abstract and ideological view of so many of the things that we speak about here in Israel and Startup Nation, but don't often really contemplate. So I'm glad we went deep in so many different directions. Thank you so much,
Too.
Yuval.
Thank you.